Very good morning. These are the top business stories, live from the Sky Newsroom. And we start with breaking news. The sale of the Observer newspaper to Tortoise Media has been finally approved. The door is open. That's the words of the Energy Secretary. This is the government is prepared to listen to plans for new nuclear power projects. Plus, why China is dominating the electric vehicle market and what the UK car industry needs to do about it. Very good morning on this Friday Business Live with me, Darren McCaffrey. And we're going to start with that breaking news within the last hour or so. As you know, we've been covering this story over the last couple of weeks. This is the proposed takeover of the Observer newspaper by Tortoise Media. Well, it has finally been given the green light. Let's speak to our city editor, Mark Lyman, who's got the details. Mark, this has been pretty contentious, but it does now seem to be over the line.
Yeah, it's a highly contentious deal, Darren, ever since the talks between Tortoise Media and the Guardian Media Group, the parent company of The Observer, first emerged back in August. Now, of course, this week, Guardian journalists went on strike for the first time in decades in protest of the sale of the world's oldest Sunday newspaper to a 6-year-old digital media startup. And so the timing of this confirmation that the deal has been given the approval of the board of the Scott Trust, which is the Guardian's owner, feels pretty incendiary. I understand from sources inside the Guardian that that there will be consideration given to further strike action in the wake of this announcement this morning. And just to recap the major details of the sale, the Scott Trust will retain a stake in the Observer by virtue of taking a shareholding in Tortoise Media. Itself, Tortoise has pledged to invest £25 million in the Observer and retain its print edition, as well as giving it a dedicated digital presence, which it doesn't really have at the moment. But as I say, a highly contentious deal that could yet yield further industrial action. Of course, in the last couple of weeks, we've also heard speculation about potential rival bids for the Observer, but other bidders were prohibited from holding formal discussions about a deal with the Guardian Media Group because it was in exclusive talks with Tortoise Media. We'll have to see whether today's announcement flushes out the identity of those other bidders. Dale Vince, the eco-entrepreneur, has also stated publicly that he would have been interested in an acquisition of the Observer had the talks with Tortoise fallen through. Of course, that has not happened, so it remains to be seen whether Mr. Vince can engineer another role in this process. But as I say, highly contentious, more strike action potentially on the way, but this deal does look now like it's going to happen.
Yeah, indeed, there has been lots of concern, hasn't there, Mark, about how sustainable this bid is, given Tortoise Media's current accounts and where the money's going to come from. I'm sure you'll be across it as we go into the weekend. Mark, thank you very much indeed. Mark Lyman there. Let's step away, if we can, from business now. Let's talk about an alternative healer who's been sentenced for manslaughter following the death of a 71-year-old diabetic woman at his slapping therapy workshop. Let's have a listen in to what's been said at Winchester Crown.
Final conviction in Australia on a retrial was on the 3rd of May 2023. Importantly, the offence in Australia had been committed much earlier than that. In fact, the offence in Australia was committed on the 27th of April 2015. This was about 16 months before the offence in this country, for which I have to sentence you now. There were some similarities between the two offences. I now set out the facts of the case. You were convicted in this court of manslaughter in relation to the tragic death of Danielle Carr-Gomm on the 20th of October 2016, when she was aged 71. Danielle Carr-Gomm had type 1 diabetes. She had been prescribed insulin to manage her condition. She had to take this insulin by subcutaneous injections, which she administered herself. The jury received evidence about Mrs. Carr-Gomm, including a recording of her speaking, as well as other written evidence and testimony from her son, Michael. It is clear that she was a youthful, vigorous 71-year-old who should have had a lot of life still to live. Her untimely death was a tragedy for her and for all those who loved her. Mrs. Cargom was diagnosed as a type 1 diabetic relatively late in life. She was a committed vegetarian. She did not like taking insulin, and she did not like the use of needles. She strongly wanted to find an alternative treatment that would enable her to end her use of insulin injections. She attended a residential workshop in October 2016 led by you. The workshop was on the topic of Paida Lajin. You claim...
There you go. That's the sentencing currently taking place at Winchester Crown Court after the death of a 71-year-old diabetic woman at the hands of an alternative healer. And you can get more on that. In fact, you can watch the proceedings from Winchester Crown Court if you want on the Sky News app or indeed on the website. Just scan the QR code that you can see on the side of your screen for that. On Business Live, let's move on, though, because another blow for the Chancellor this morning with the influential business group, the CBI, warning that the UK economy is going to see shallower growth than previously expected because of the budget. The CBI has downgraded its growth projection for this year and for next because it says that business investment is being constrained by cost pressures from the budget, including that rise in national insurance contributions and the increase in the national living wage. There were similar warnings yesterday from the British Chambers of Commerce and the Bank of England. Well, let's speak to CBI's chief economist, Louise Hellam, who joins us this morning. Very good morning, Louise. I mean, it's quite difficult, these figures. You know, as I say, it's not just you guys this morning. This is part of a pattern now, suggesting that we're going to see sluggish growth over the next couple of years.
That's right, yeah. I think we were really hoping that growth was going to be able to start picking up after a lot of the shocks that we've all faced over the last few years. But we have seen sentiment really take a downturn since particularly the summer and some of the rumours about what might be in that budget package. And I think that's really solidifying now that we've had some of those measures, particularly the national insurance contribution increase that you mentioned there. And that is really constraining businesses in terms of what they'd like to give to employees in terms of wage increases. It's definitely impacting their hiring decisions, and it's also reducing their investment as well. And those things are all adding up to mean that we're expecting slower growth next year and the year after.
And Louise, is this all at the door of the government? I mean, you seem to be suggesting these tax hikes are not just, they are essentially fundamental to this sluggish growth.
So I think the big thing that we've seen is a really big shift in the composition of growth that we're expecting, actually. So there is a lot that the government is doing in terms of capital investment, which will be really positive for long-term growth, and actually does mean that we will see more positive growth next year from that side of the equation. But that is really crowding out business investment in particular, and it's really moved that burden onto businesses in terms of how they're paying for that government investment as well. So next year we're really seeing that shift. The next year after, when you see some of that government investment fall away because we haven't encouraged that private sector investment, that's where we do really see that downgrade to our forecast. And in the long term, like I say, it really is businesses that is the engine of growth. So if not, we're not thinking about how we can actually encourage businesses to invest in their skills, invest in capital investment, then that's where we're not going to see the real shift that I think we all want to see in growth in the UK. And ultimately, that will mean it will be more difficult for the government to meet some of those ambitions around increasing living standards for everybody.
Well, indeed, and, you know, growth is meant to be at the centre of what this government is trying to do. So what is your message, and I suppose fundamentally, you know, if Rachel Reeves is watching this programme, what is your message? Because the government's not going to change course, I think, on these tax rises. They simply aren't. So what can they do to try and bring about some economic growth?
So I think the big thing that they need to do is to double down on some of those positive things, like I say, that they are doing. So it's really great to have growth as that central message for government. We've heard a lot about proposals to reform the planning system and to have much more clarity around the industrial strategy for the UK. I think those are all really positive things. We need to really make sure that the government is delivering on those, though, because there's a lot of detail underneath that is still not quite known. And like I said, I think for firms who are thinking about, how they can improve the productivity of their workforce, really engaging with firms about some of the reforms we need around the skill system, particularly more flexibility around the apprenticeship levy, support for businesses of all sizes to think about how they can increase tech adoption, and also really think about how some of those elements of the tax system that they said that they will reform, like business rates, how can we do that much more quickly to provide some relief to businesses?
OK, Louise, we're going to leave it there. But thank you very much indeed. Louise Hellam there from the CBI. Thank you.
Thank you.
Just going to bring you up to date with some breaking news that's coming to us here at Sky Centre, and that is that a judge has ruled that there is sufficient evidence for Soldier F to stand trial for the murders of 2 men and the attempted murders of 5 others on Bloody Sunday back in 1972, of course, in Northern Ireland. From behind a screen in court, he pleaded not guilty to all charges. But I say that news just coming in that a judge has ruled there is sufficient evidence for Soldier F to stand trial for the murders of 2 men back in Bloody Sunday in 1972. We'll have more on that and the main news at the top of the hour. Now, the Energy and Net Zero Secretary Ed Miliband says his door is open for new nuclear projects and that the government will work with the industry to push through developments. He also said he was delighted that 4 of Britain's 5 nuclear power stations are going to stay open for longer than previously planned. Let's speak to Julia Pike, Joint Managing Director of Sizewell C, the UK's next planned nuclear power station. Before we get on, Julia, if we can, to what Ed Miliband's been saying, where are we with Sizewell C? I mean, it's a big project. Are we on time? Are we on budget?
I'm delighted to say we are both. We have this huge advantage of copying Hinkley Point C. I don't know if people saw the fantastic footage of the reactor pressure vessel being put into place earlier this week, which is a real testament to the rebuilding of UK's skills in nuclear engineering. So with Sizewell, it's going really well. We've got all of our consents, and people talk a lot about planning consents, but we have ours. We'll have around 1,000 people on the site by the end of the year. We've got a lot of equipment in manufacture, and we've got a lot of things being ordered for sort of support to the site. So this time last week, for example, I was in Ballymena visiting Wrightbus, who are going to make us around about 150 clean buses to transport the workforce. And that's actually, to your last item, it's a great example of growth where Wrightbus are able to double their apprenticeship numbers. And, the more that big projects like Sizewell, the more we're able to buy British and, really bring on people with skills, raise aspirations, increase the numbers of people actually in the job market, then I think the better we'll all be, as well, of course, of having electricity.
Yeah, I mean, that's true. But at the same time, what's fascinating about Sizewell C is that EDF, a French company, is essentially involved in this because, from my understanding, we don't have the expertise in this country to build a nuclear power station on our own.
Well, EDF acquired what was British Energy around about 16 years ago or so. And then EDF's poured huge amounts of money into rebuilding skills in the UK to build nuclear at Hinkley Point C. Sizewell is actually majority owned by the UK government. So in some ways you can see it as reshoring a lot of skills for the UK nuclear industry. So it's currently owned around about 80% by the government itself.
OK, let's talk about the government. I assume you're pretty pleased with what Ed Miliband is saying. This government seems to be very much pro-nuclear.
Yeah, we're very pleased. We were very pleased with the allocation of 2.7 billion to us to continue building the project to schedule. And of course, we were very pleased with the Secretary of State's speech yesterday. Yeah, it's really good news for the industry.
But just explain to us, I suppose, why in many ways nuclear energy is an important factor in our energy supplies into the future. I know we're focusing on renewable energy as a country, wind, for example, solar, but it does seem that, places like Sizewell C and potentially others will be a big part of our energy reliance for decades to come.
Yeah, that's right. I mean, there's going to be a mix. There's going to be a huge growth in renewables, but in lots of ways, nuclear supports the growth in renewables because it's always on power. It's not weather dependent. It's there 24 hours a day, 365 days of the year. Obviously, it does have outages, but it's very reliable. And what we want as a country is like abundant energy, and we want bills to go down. And so nuclear plays a really important role as part of a mix in helping bring down electricity bills and in making sure that there's abundant, continuous energy as we maintain our industry. And actually, as we look at the huge growth in our country's demand for electricity, as we move further and further into AI, we need to supply data centres. So it's just a really important part of the future system that the government's setting out.
OK, Julia, really appreciate your time this morning. Julia Pike there from Sizewell C. Thank you very much indeed. Now, across the UK and Europe, car companies are cutting jobs and shutting factories as they struggle to adjust to an electric future. China now dominates the market, so how can the car industry here compete? It's a question that our economics and data editor, Ed Conway, has been looking at.
What is going on with the European, the UK, the US car industry? It is facing a really difficult time at the moment. I know it's an exaggerated title, but there is still something going on right now, and it's tempting to blame everything on, for instance, Brexit or political regulation. But actually, there's something else happening here. A big shift in the way that we manufacture cars, and that is having a bearing on the entire car market. This is showing you traditional car manufacturers and their share of exports in recent years, Japan, Germany, South Korea and the US. And look at what's happened with China. Just look at that red line. It's overtaken pretty much everyone, and that is largely because of electric cars. And the difficulty that people in this country, for instance, have right now is that making cars is more expensive, OK? So this is showing you the component parts of a VW, a Volkswagen ID3, made in Germany, from the battery to other parts. It's an electric car. And now comparing it with a BYD Seal, a cheap car made in China. And you can see the costs are 29% cheaper for the battery, but also all the way down, it is cheaper to make things in China for all sorts of reasons. Energy costs, you've got government subsidies as well. But there's something else as well on top of that, which is the whole nature of this supply chain is very different, OK? So this is showing you the different parts of a petrol car, so an internal combustion engine car. And the key thing to note here is most of the value is in the engine, and most of the work goes into the engine. You know, a lot of the expertise, a lot of the skill is making the engine, all those different parts in the engine. But switch on to electric cars, and it's a very different story. Most of the value is in a battery, and making a battery is very different to making an engine. You can't just take those people and say make a battery. No, it's very different indeed. And right now, China is dominant on that, which is why China is so dominant when it comes to making electric cars. That red bit there is the Chinese share of the market for electric cars, 65% for cars in total. But look at batteries, and it's 82%. So China is winning when it comes to this part of the supply chain. But look further down the supply chain, the things that go inside the batteries, the electrodes, that's 87 to 96% of the market. You see the pattern, then you can go even further down and look at the chemicals that go inside those batteries. Mining is really the only area where you don't have quite so much red, because obviously you can't control what is in the ground, although with graphite, China is dominant. But it just shows when you're making batteries, when you're making cars, China is really dominant all the way down there, which is partly why you're seeing that red line going up like that. And it's partly why different countries, many countries around the world, are imposing tariffs on Chinese electric vehicles. The US, Canada as well, 100% tariffs there. India, very high tariffs. Turkey, the EU recently put tariffs in. In fact, pretty much the only outlier, apart from Japan, which basically tends to buy Japanese most of the time, is the UK. 0% tariffs. Makes this place a very attractive place to sell your electric cars if you're from China. Raising the question, is that going to stay the case? And if so, what happens to the UK car industry?
Carmageddon, there you go. Ed Conway, thank you. You're watching Business Live. Coming up next, we'll be looking at the markets. The FTSE hasn't really changed very much today. Very little movement, but we'll have all the details in just a couple of minutes.
I'm Siobhan Robbins, Sky's Europe correspondent based here in Berlin.
In Sweden, police have seized a lethal stash.
Anyone of any age can say, I'll do that for £1 million and then have to go and shoot someone.
Yes. Sky News, the full story first. I'm Greg Milam and I'm Sky's Chief North of England correspondent.
This is insane. This was a bustling residential area.
I'm Yusra Al-Bagher, Sky's Africa correspondent based in Johannesburg, South Africa.
How difficult is this to police tonight? Off the scale.
I'm Dan Whitehead, Sky News' West of England and Wales correspondent.
It's a Premier League double derby weekend on USA. First, On Saturday, Liverpool look to strengthen their title run against Everton in the Merseyside derby. Then Sunday, Chelsea aim to stay in the hunt when they face Tottenham in a London derby.
And this meeting might shift the dial in that derby.
The Premier League double derby weekend on USA.
A show of military might and menace. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Sky News. Get the full story first. Have a quick word for Sky News. Is the West right? Are you fueling Russia's war machine? American journalist Evan Gershkovich is on trial here, but was first on display. I'm Ivor Bennett, Sky's Moscow correspondent.
Gives you the very best of Sky News wherever you are. Breaking news, videos, analysis, up at 6%. Podcasts, watching us live. Joins us live all in one place and all at just the touch of a screen. The Sky News app. Get the full story first.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent. As a team, we've interviewed some of the biggest stars in the world, the likes of Tom Cruise, Brad Pitt, Sir Elton John. We try to give you an honest sense of how these people really are.
Welcome back. Let's have a look at the markets on this Friday morning, and they're all in pretty positive territory. That's despite the gloom from Germany, which posted an unexpected fall in its industrial production in October. But as I say, it's blue across the board there. Not here in London. The FTSE is down a little today, weighed down by losses in defence stocks and utilities, though there is one big winner, and that is Direct Line, after Aviva agreed to buy the insurer. The company said they've reached an initial agreement over a deal worth £3.5 million. The move will create a significant force, of course, in the motor insurance sector, estimated to cover more than a fifth of the total market. So as you can see, Direct Line shares up over 7% today. Let's look at the currencies, and the pound is up, making some ground back against the US dollar after weeks of decline, up at 128, and also up against the euro at 121. And finally, let's have a look at the price of Brent crude oil, and it is down nearly 1% at $71.45 a barrel. Let's speak to Jochen Stanzel. He's Chief Market Analyst at CMC Markets and joining us from Frankfurt. Very good morning to you. Since you're in Germany, let's talk about the German economy. We've been talking about the British economy this morning, and it's pretty sluggish here, but my word, it looks a hell of a lot better in the UK than it does in the powerhouse that used to be Germany.
You're absolutely right. You see it in the economic data of today, and in the past weeks it hasn't been better. But there is a lot of hope baked into this Santa rally, if you will. The DAX is up, has gone from strength to strength. It's up like the seventh day in a row, up 7%. And many people are shaking their heads over what's happening here, and they are all looking for the answer to this. And I think if you look at the numbers within those 40 stocks that are in the DAX, then you can find something that you may very well call the Magnificent Six stocks, and they are very much disconnected from the economic weakness in Germany. And those Magnificent Six stocks are the two insurers, Allianz and Munich Re. You've got the SAP, which is a software developer, of course. You've got Siemens and its spin-off Siemens Energy. And then you've got Deutsche Telekom. And if you look at those stocks, that all the gains the DAX has made since the start of the year mainly come from those six stocks. And they are pretty much independent, as I said, from the German economy. They are profiting from sector trends like wind energy. They have pricing power like Deutsche Telekom with the fiber class expansion and T-Mobile USA. And they are profiting from artificial intelligence when you look at Siemens and SAP. And there you have it. That's basically the reason. You've got 34 other stocks in the DAX, of course, but some are up meaningfully, but some are down meaningfully under basically if you sum that up, there is no performance coming from them. It's just about all those magnificent six stocks.
Yeah, but away from the stock market itself, I mean, as I said, the wider economy is in quite a lot of trouble. I mean, essentially, Germany is not really growing, has it, for the last couple of years?
That's absolutely right. There are recessionary fears. And there is a lot of hope, basically, to the snap elections in February, that they will lead to a election result that would lead to a government that could bring new stimulus to the economy. They are also talking about lifting the debt ceiling, which has been the main reason why the traffic light coalition, the last government that failed, has failed. It was a discussion about the debt ceiling, and there could be some lift there, could be some government investments, and there could be a second half of 2025, which could be stronger.
And yeah, you expect the CDU, if they win, might be a bit more pro-business in some ways. And this comes, of course, at a time in which the second major engine of the European economy, France, is also in political and economic turmoil.
That's my big fear, that we get a similar problem when it comes to the election results as is in France. France is only able to have new snap elections in the summer of next year, so a little later than Germany. But if you look at Germany, it could be, if you look at the surveys right now, then the CDU could lead the new government. But surveys are, as we've seen in the United States, they are surveys. They are not the election results themselves. So the main problem in France is that the political middle has been eroded so much, and there's so much going on the left and right side. And something similar could happen to Germany, where there could be a minority government that could not make any steps forward. So it's not yet in the results.
Okay.
We need to elect first, yeah.
Joachim Stanzel, live for us there in Frankfurt, Germany. Thank you very much indeed for your time this morning. Appreciate it. Thank you. OK, that's it from me for Business Live for the moment. Of course, we're back again at 4:30 this afternoon. Do join me for that. Up next, it is Kamali with the very latest news, including the latest on that storm Dara that's due to hit the UK and Ireland over the next 24 hours, and also on the rail disruption that we've seen. We believe the problem has been fixed, but still lots of disruption out there. All those details up next at midday. I'll see you a bit later.